Welcome everybody to Quanta's 2026 Outlook videocast. I'm joined by a handful of our senior management team today, and we're here to discuss 2025 and wrap that up and give you some information about how we saw that, and also have a look at the future and what's happening in 2026. So welcome team. Good to have you here. We'll start off with our founding director, Stacey Jones. Stacey, we had the most active year, I think, in terms of purchasing for Quanta last year.
Definitely.
But we also acquired some very good senior staff members. Talk to us a little bit about the impact they've had on the business so far.
One is joining us here in Caitlin, and Caitlin came around with us to the investor roadshows. Caitlin's been a fantastic addition to the team in really helping us to make sure that we're focusing on the existing assets in the portfolio. At times it can seem relatively easy to acquire them, but making sure that we follow through on the strategy that we set at the time of acquisition, altering that strategy where we need to, and being nimble to make sure that we're maximising investor outcomes is incredibly important, the most important part of what we do. And Caitlin heads up that team and does it incredibly well. Having someone so senior to make sure that we are squeezing every dollar out of there, invaluable to the team.
And blushing as we're going through this as well, Stacey.
She's
it's
nodding. She's nodding. I think she knows. She does a great job.
First time on the camera today.
We've also had Cameron Doyle in projects, and Cam's a straight shooter. Yeah, you can tell that he's done his time on the tools, and because of that, he knows the projects inside and out. He speaks the language of the contractors fluently,
which we won't speak.
Today. Probably need some bleeps if we spoke that language, but he can handle the contractors on site, and he brings it back to the office in a way that meshes very well with the team, again, to make sure that we are sticking to budget, things are being done properly. We're not being taken for a ride in areas where we may not have the expertise, because he does. He absolutely does a fantastic job. We've also seen Guy, who's joined again in Caitlin's team in facilities, who again are very senior and experienced, making sure that the operational parts of the buildings are performing as they should, to make sure that our tenants are happy, which helps with things such as leasing renewals and tenant retention.
Yeah, and look, I think we need to make the point that any investment into our staff isn't at the cost of the investors. It's just an extra investment to make sure we're maximising the outcome for all of our trust as well. Yep. And agreed, they've been fantastic additions, and there was probably a few things that we've been nudging along for a while, and since we've got these senior people in there now, they're really pushing those things over the line.
That's right.
And we've had some great results, which we may talk about later. Stacey, we've received great support throughout our opportunities. I think everyone will agree. We're not trying to make Dave's job too easy, but we certainly had great support.
Sometimes it has felt it's been a bit easy this year, Dave.
Yeah, well, we're fully subscribing pretty quickly, yes. So it's been good.
So there's been great support there. What do you think in 2025 helped that cause in terms of investor support?
I think there were a few things. One thing I've always said is activity breeds activity. So the more acquisitions you're doing, the more you're in front of people, the more that your name is out there. I think that goes for any business. The second is, I think that we've been given a really good opportunity to make good on our word. So we've said the things that we believe set us apart, and by having the extra opportunities, new investments and those under management, we've been able to prove that we do what we say we're going to do. They're not just words to us. The team has invested heavily in the assets. We care about investors' opinion and their experience. Without them, we can't do this. So it's not of a case of set and forget for us. We know that if we don't look after our investors, they're not going to stay with us on the journey. And we've been able to prove that, and we continue to do so.
And you really get the feeling, Dave, when we go to the investor events like our roadshows, the genuine relationships are really forming, and that's, I guess, we're in business 5 years this year. You get the feeling that it's genuine partnership. People enjoy catching up with each other, don't they?
Yeah, absolutely. I think over time we introduced the investors to more of our team as well, which I think is really important. It's not just myself or the team, myself and Brock in investor relations. It's the whole team that come to Sydney, Melbourne.
Yeah, Caitlin came to a couple of all the events for the roadshows
as well. So they can talk to anyone at the table. We're giving honest feedback. We'll talk to them about anything. We'll meet them for a coffee.
Yep. And have a bit of fun with a lot of
Yeah.
them, to be quite honest. It's probably too much fun.
We're
Some,
actually really fortunate. Such a great
Yeah.
group that those events are really enjoyable.
yeah, they've become really enjoyable, haven't
Yeah.
they? Early on, it's a little bit of small talk as you get to know each other, but they've become a lot of fun.
Sydney siders like a drink.
Sydney siders in
we,
particular,
They
yeah,
do.
they cost
hang
us a
around
bit of
for a
money.
few hours afterwards.
They do. Stacey, what do you see as some of the biggest challenges in 2026 for our industry?
Look, I think, Aaron and Andre will talk to it in more detail, but I think that the changing financial landscape is going to perhaps create a little bit of uncertainty, which we always know that when there is some uncertainty around, investors can become a little bit hesitant. We had a lot of new investors join us last year, the biggest by percentage that we've
Yes,
had
definitely.
since we started. And I think that, that owes to the things I spoke about before, us delivering on our promises and being accessible, all of those things. So I expect that we will see a steady increase again as we go through this year for those same reasons, word of mouth of existing investors, which hopefully can see us, continue to raise throughout those challenges. We've got a very experienced team who know what they're doing. We are very careful in what it is we put to our investors. So, while the challenges might be out there, I think we're positioned very well to overcome them.
Yeah, agreed. I'll talk to Andre as we go on a little bit about some of the challenges in the market. I'll move on to Andre. Andre, tell us how 2025 wrapped up for Quanta and its investors.
2025 was really strong for us. In the calendar year, we did $65 million of transactions, 5 transactions in total, 4 of them off market, which really highlights, the importance of having an active transactions team, having those relationships. We picked up what we believe are obviously very strong assets with good returns and strong capital growth as well.
Just on those 4 off market transactions, I think one of the big advantages, and you can talk to it, was we got access to the vendors, didn't we? And sometimes you're always dealing with an agent. Talk to us about the power of having access directly to the seller.
Yeah, it's paramount. Like when we look at the deals that we've done last year, we dealt with institutional vendors, we dealt with private investors, we dealt with some sale and leasebacks. So every vendor has different levers, different pushes and pulls. Being able to access those vendors in conjunction with the agents as well is very important to be able to get the right information we need and identify those risks and mitigate those risks accordingly throughout the transaction.
And when things get sticky, it's hard to have a mailbox where you're sending something and someone's passing it on. Just going directly to that to the seller was it's very good for us. What about activity in 2024? I think when we had sat down, had the conversation last time, or in the various places we did in Ann Street, we thought there'd be more activity in 2025. Talk to us a little bit about what happened across commercial property.
Yes, I think that definitely happens. So there are effectively 3 market segments in terms of property investment. There's the institutional and super fund investors, there's the fund managers and syndicators, and then there's the private mum and dad investors. Across the board of those investor profiles, we saw much stronger engagement, particularly in the institutional and super fund segment. Towards the end of last year, there was a huge surge of institutional capital, which they held off over the last sort of 3 years until quite recently. That transaction volume and market certainty really came about due to rate cuts as well. A lot more market certainty in the cost of capital coming down, and that really bred a lot of activity in market activity. Yeah.
Tell me what your most rewarding transaction was through last year.
Well, it's front of mind because it just recently happened, but I think Chermside's probably a really good one. That's one that originally an on-market campaign, we kept in touch with the agents and knowing what was happening with, that was actually part of a portfolio that we originally participated on. And just keeping in touch with the market and understanding what was happening, that eventually came back to us off market once another purchaser didn't complete. And dealing with an institutional vendor has its challenges, but also its benefits. When we went on site, everything was professionally managed. The tenants were really happy with the existing incumbent manager, but then also were happy that another group was like us coming in as well. Great returns, good profile, and just that off-market relationship eventuated into a really good transaction.
Did you find any challenges in that, or?
Look, strata's not necessarily a bad thing. I think it's really just identifying, what are the risks and the challenges with that particular structure. We did a lot of work looking through the CMS, the bylaws, the sinking funds, and what you can and can't do, as well as the history of the asset. So we found comfort through that process.
And look, we sat down and spoke to the tenant at length. Caitlin, you actually just recently went to a body corporate meeting in relation to that property, and things seemed very well run. Would that be fair to say?
Yeah, very, very professional and very willing to work with us as a new purchaser coming in, including the way that we've dealt with the tenant as well. Everything's been very positive so far.
Great. And Dave, that didn't seem to deter any of our investors. Medical seemed pretty good appetite for medical, and also 9% seems very popular.
Absolutely. We only received a handful of questions around the strata piece, so that was easy for the team to talk to about the benefits of that structure for this deal. And yeah, as you say, talking to sort of the appetite of investors, our survey that goes out every year suggests that medical and healthcare is a very important sector for investors. It's certainly on the rise in terms of their appetite moving forward. So
we paid about 14.5 million. And we raised about nine-ish. And how long did that take, Dave?
3 days.
Yep.
Yeah,
So,
very, very popular.
So it's something we might look at again under the right situation, Andre. Another strata.
Yes.
Yeah, good. Okay, fantastic. What are we looking at in 2026, Andre? So what do you think we'll target?
Yeah, like you said, we're very driven by investor feedback. I think the strongest sentiments, and correct me if I'm wrong, Dave, is really industrial, medical, retail office, a standard suite of commercial assets. I think we're very opportunity-led, assets-led, and market-led. So asset class is very easy to generalize on, but it really depends on the asset specifics and the investment fundamentals, which really drives our investment philosophy.
And Dave, and what, so again, on the feedback from the investors, we're still focused on health and industrial, if and when they come up at the right yields and right buying. And
absolutely, as Andre says, industrial, medical and healthcare, they seem to be very, very popular. The others that sit very close to them are office and retail as well. So those commercial opportunities, very well received by our investors. So of course, Andre and his team can go looking for those. I'm sure it'll be very well received and good appetite for future investment.
Yeah, thanks, Dave. We had a pretty robust conversation in the office yesterday, Andre, about looking at assets that might have some development opportunity, that might be lower yielding with a far greater capital outcome, and a different product for different reasons, because people like variety in what they're and diversification in their portfolios. Is that something in 2026 we still want to have a look at to see if we can throw one of those up and see what reaction we get?
Yes, definitely. I think we've got our traditional product, and then we're also looking at assets where we're really focused on the risk-adjusted return based on what the market's paying for these types of assets and what opportunities and value add and capital growth is available for those sorts of assets as well. You'll see across the market, across institutional and fund managers, everyone's got different investment mandates, and some are buying at 5% yields with high capital growth, and others are paying at higher yields with really strong cash flow. And it really depends on what assets you're looking at and what value you're getting out of those. And that's really important to us. So we look at that, not just a specific return hurdle.
So that's important for investors as well. One of the questions in our survey is what of the metrics listed are the most important when it comes to a new investment: distribution, capital upside. But it's pretty clear from the respondents that not one thing. It's a little bit of everything all the way through. So that's why Andre and his team are so the whole team are so careful to go through every opportunity and just make sure we are looking at every single thing in individual.
And then Dave, our investor base is becoming more diversified in itself. We had a lot of retirees, they're looking for the monthly return now. There's some more, I guess, youth being injected into that, and those people might be looking for longer, lower yields. They're currently working, so they don't necessarily need the monthly, but they're keen to see their capital grow, maybe on a 10 or 15-year hold. So that might be something we throw in there as well. Thanks, fellas. Aaron, this will all come down to a little bit, I guess, in terms of what's the market going to do in 2026, to what's happening with the interest rates, because changes month to month and changes quarter to quarter more so. What's your view of the interest rates in 2026, this early stage?
Thanks, Tim. It's a really important question. Look, while predicting and forecasting interest rates is extremely difficult, my base case sort of view for 2026 is a period of relative stability when compared to the tightening cycle that we experienced, through that period from May 22 through November 23. That said, the re-emergence of inflationary pressures within the economy does present real challenges going forward. And it does also increase the risk of the Reserve Bank, returning to a tightening bias where we could likely see rate rises again now. Should we see rate rises flow through, I think the level of increase will be a lot more modest than what we experienced through that tightening cycle previously. Despite that, I think for real assets and property, a period of relative stability is actually quite good, in the sense that what it will allow is for capital markets to really think about repricing assets for risk more rationally. It provides a period for the stabilisation of cash flows and serviceability. And I think those couple of things will also sort of then feed into that stability, sort of supporting activity within the market and ultimately sales within it.
Good. And I guess that flows into my next question. You achieved some fantastic results in terms of all up debt costs in the last 12 months, well, probably the last couple of years, to be fair. Where's that driven from, Aaron? So why are we getting great outcomes for our investors and our trusts in relation to that?
At the core of it is a really strong, deep relationship with our lenders. And that sits at a couple of levels. One, it's a personal relationship, which I hold. But ultimately, those personal relationships are really the fronting of a corporate relationship that sits behind. I'm really fronting Quanta as a borrower client from a managed investment scheme side, and ultimately our relationship managers are fronting the banks from their side. Very rarely is price driven by the numbers alone. At the heart of, I guess, the pricing outcomes that we've been able to achieve is far more, and it's ultimately driven by trust, it's driven by track record, it's driven by
the assets themselves, I presume.
I was
the story.
Just going to say, it's driven by the lender's confidence, not only in the underlying asset and real estate that we're putting forward for them to be a funding participant. People need to also remember that ultimately the bank becomes the largest investor in the underlying asset. But it's also their underlying confidence in the management team within Quanta, with lending terms for us that ultimately then deliver the best possible outcome, not just for price, because that ultimately is the headline that people typically attach to as being almost the lowest common denominator of commercial terms. But the other things that people lose sight of, it's the underlying financial covenants or the lack thereof or the burden of those and other underlying terms that might be more critical for some assets than others in terms of the tenor, being the actual loan facility term, as well as the downstream reporting requirements and conditions.
So are we able to disclose sort of where we've come from in terms of margin, and not specifically to each investment, but can we disclose the all-up cost that we're getting now from some of our financiers, or that's something we've got to keep confidential, because it is, we're breaking sort of records each time we go, or each time you go back to the market?
Yeah, look, it's a really difficult thing in some ways, because when we actually enter into those arrangements and terms, there is a confidentiality element to those.
So no? You can say no. You've got the spotlight on you. But
my preference would be no, because it does probably then lead to, I guess, challenges of maintaining and sort of, because it's...
Investors in the trust are provided with the details, but
They're
probably at a more
this will be seen
openly.
probably in a little
I'm
bit
trying
more
to toot our horn a little bit here.
sort of basis.
Wow,
But
Just say they're good.
But
Very
what I would say is I've had a 30-year finance career, and the margin pricing above base cost of funding is that I've consistently been able to achieve now over really the last couple of years, and that has continued to improve, particularly over the last 12 months.
I think the way that Aaron packages it up to the prospective, at that point, lenders, because of his history, he knows so intimately what particular parts of a transaction might be or might present concerns to particularly the risk department of lenders. So we're able to address those. Either we come up with a mechanism of how we're addressing it that we hadn't otherwise sort of identified, or we present it to the lender in such a way that it is very clear that we've thought about it and here's our plan to deal with it. So as part of that, they never get the opportunity to get a negative view of something. They don't look at it and go, oh, well, that's a problem. They look at it and
already
go,
been dealt
oh,
with.
and here's how they've dealt with it.
how
So
do we
it
exit it?
maintains that positive view of something, and that is really because of Aaron's experience in how to present them and in how to deal with those. It's not because we're sugarcoating or, things are, swept under the carpet. We're very open and honest with how we present them. But if there's any hairs on something, that's presented with an immediate solution of how we're going to deal with that. And that's incredibly
Which
useful.
is the power of the team really working together. Caitlin, first time under the spotlight, already speaking very well early on. You came on board with us at the middle of 25, and Stacey's already credited you with such a great job. And I know personally when I was trying to do parts of the job you're doing, you're far better at it than I am, and we've seen the results of that. But you have been to things like the investor roadshows, and you've met investors, and you've had a look at the things that we're buying. It's not just all about asset management. How have you found things so far with Quanta?
It's been fantastic, actually, and I feel like I've slotted into the role and into the company really fast and very comfortably. Probably one of the most beneficial things for me was to sit in those investor roadshows and meet those investors so early in the piece. It gave me a very good understanding of what are the drivers behind needing to then manage those assets, because it's a very serious thing to be managing people's money and making sure you're maximising their return. And they're just a fabulous group of people and clearly very loyal to Quanta.
Yeah, and you're right. You fit in very well immediately with the team, but also built rapport really quickly with the investors, as we've seen in your discussions over that time. You've had a incredibly beneficial impact on our leasing. How have you found that across all of the portfolio, and where have you spent a lot of your time so far?
The vast majority of my time of late has definitely been in leasing. We've done a lot of new deals across the portfolio. We've got at least a dozen that we've done in the last 7 months, another 6 in the pipeline, which we're hoping to close out in the next few months. And aside from new leasing is retention. Tenant retention has been very, very strong across the portfolio and clearly very, very important too. So that's been a lot of my time. I've tried to proactively and engage very early with a lot of the major tenants in particular to look at renewing their leases as early as possible, not waiting until the last moment. That's also fleshed out a lot of really important discussions around what the tenants feel we need to invest money in across the portfolio and where they're seeing things, because they're on the ground every single day. They really understand it so well themselves too. So being able to engage with them has been really positive, I think, in understanding and then setting or tweaking the strategy for the assets.
Yeah, which has been a big change for us as well. We're working them pretty hard, but we've seen the polish put on it now. And I know when Andre's doing his internal vals, etc., at the end of every year, we're starting to see those valuations, unit prices head in the right direction. You've got, I'll call it 4 people in your team, plus Cam, who you work very closely with in projects. How's the team going so far?
Fabulous team. I couldn't be more blessed actually with a great team. They've been very proactive and really willing to work with me on what we feel we need to execute for the properties. Cam has been fabulous to work with. He is a real go-getter and he moves very, very fast. So sometimes we need to rein him in a little.
Yep.
But he's been very, very good in identifying issues that we need to resolve and then deploying the capital there.
You've managed to get a handle on the portfolio very quickly. Where do you see the big opportunities for us this year in 2026?
So we're putting a lot of time, again, into the leasing and retention strategy across the portfolio, and then also in resetting a lot of the asset strategy. So I've been doing a lot of work with people like Aaron and Andre and the rest of the team. And one, understanding the investment thesis of the properties that we've already purchased. And then if we need to tweak that or adjust that a little bit, to really set that and ensure that all of us are operating from the same page and we're all executing a strategy that's aligned.
And that's things like where to best allocate capital and, getting the budgets right and all those sorts of things, I presume.
Prudent financial management is a really big thing for me. They're well-managed properties already, but we've been able to identify some areas to either maximise the income or potentially reduce some of the expenditure, and ultimately what we're trying to do is maximise the net return for the investors.
Dave, let's get over to you. As you do, you normally go out with your investor survey, and you've just, I think, got most of the results back in, if not all, in the last couple of days. And you talked a little bit about preference of sectors. What else are you seeing in the survey?
Yeah. So I've got some notes here. But yes, we're finalising the numbers now with this year's survey. We get a really good response rate from the investors over the years, and this is no different. So thank you to all our investors there. We have great communication with them, and they repay the favour by letting us know their preferences for the next year, which is great. So intentions to invest, we had over 70% saying that they were actively looking
to deploy money. Yeah.
And deploy, as you say, in 2026 if the right offer is presented. Now, we had 5 in last year, 2025, all very well received. So if we can put another 5 forward, Andre, it's on you. Hopefully we can have another good run there. We spoke a little bit to the sector choice, so industrial and medical being very, very well supported, office and retail there as well. But it is worth qualifying that, it is state specific, property specific, all the things associated with that. So it's not, just down to the sector. And talking about states, there was one that stood out, unsurprisingly, Queensland or Southeast Queensland specifically, and it's probably a logical thing to sort of reference the 32 Olympics. There's a lot of infrastructure work going on around Brisbane. No change in sort of investment term that our investors are looking for. We tend to look towards those closed-ended funds, the sort of 7-year term. About 90% prefer that sort of 3 to 7 years as their investment term horizons.
Yes.
So that
fits with what we're doing at the moment.
Fits the same. That's very clear year on year that seems to be the preference. So we'll continue on with that. And great to see that 98% of our respondents find our quarterly reporting up to scratch.
Yes.
They really like reading them, say they're informative, provide them all the information in a timely basis. So some would like a little bit more, so working a little bit more in terms of information. So myself and Brock will put our heads together and see what else we can come up with to make sure we're keeping investors informed. As I said earlier,
they definitely cut down your questions coming in over the phone, don't they?
Oh, the day-to-day inquiry is, it's almost next to nothing these days. The quarterly reports do a very good job. The whole team,
the road shows, the
road shows, videos like this, the outlooks, our annual review. We've got a lot of different bits and pieces that we place now. Even the Quanta cast through the information memorandums, all those things. It's really good to see. And so our reporting levels are just right according to our investors. So that's great news.
Dave, in terms of word of mouth for new investors, it seems to be the reason, and Stacey alluded to the fact that we've put on quite a new we've had new investors come to invest with us and support our raises. Yeah, word of mouth's a strong thing. Is it that where you're getting most of the new investors coming in from?
We're tending to see that, yeah. A lot of existing investors are now putting people forward. So in 2025, we welcomed 70 new investors, which is fantastic.
How many active investors have we got roughly at the moment?
We're approaching 500.
Okay.
So 70 new is quite a good chunk.
Yeah.
So it's really good to see. We're building relationships with them probably quicker than we would otherwise because they're existing investors that have brought on, a brother, a son or a daughter or other family members. We're also seeing friends of friends now getting involved and letting us know, I've got a friend in WA that I'm going to get involved. So, which is great. And we also have a lot of Quanta, team members that are bringing their family members and friends into the fold now as well. So it's really good to see, and hopefully that continues.
Good. And we always place a big emphasis on the face-to-face interaction because I think you and I and Brock often talk about we see the best value there, and people just get to find out who we are. What can the investors expect to see in this coming year in terms of seeing our beautiful faces?
Face-to-face, as you say, is the best way for us to inform our investors about what's going on. So more of the same from us in that space. We're already trying to lock in some time in February, maybe March, to go to Sydney, Melbourne. Got a few prospective investors that we'd like to touch base with. Of course, if there's any other investors out there that would like to have a lunch with us or a coffee or a catch up or any of those things, we're always
happy to travel. Happy to travel. Yep.
Myself and Brock will be jumping in the car, sort of doing the rounds to Southeast Queensland. Again, we've touched base with a number of our community before Christmas, so they'd like to catch up with us. Just see what's on the horizon for Quanta and just have a general chat because as we said earlier, they're just becoming almost friends to the business now and to us as individuals. The face-to-face is great, not only for myself and Brock being in the investor team, but for the whole team. We touched on it earlier. Again, it's really important that they feel
They've got
they have
access
this
to everyone.
access and
Yep.
support of everyone around the table, not just us, but the whole team.
I think a really important thing, sorry to interrupt, but going beyond the personal interaction, I think it's much more than that. I think it's the format and the structure of, I think our personal engagement is really quite different in the market. And I think it really does separate us from a lot of competitors in the sense that, one, we do it. Two, they're structured in a very small and intimate way. We will tend to have more functions where we're inviting investors to, with a relatively high proportion of senior leadership to investor sort of ratio at those functions. And I think we actually invite a much more personal, family sort of orientated sort of atmosphere and forum for investors to feel quite comfortable about asking us questions as well. So I think that comfort and confidence that they take out of being able to sort of feel like they are welcomed into a leadership group and very much open forum for them to engage with all of us very, very directly, and knowing that they will get a very honest and complete answer in reply, I think does give and feeds into what you see ongoing through that recommendation and word of mouth and introduction of downstream investors as an extension of either family members or associates, whether that be through business or other sort of connections to those investors. And I think that's a really important thing to probably call out, is that what we do is really, really different.
Yeah, and it's entirely intentional. It's not a format that we
Talk about and
fell
design.
into.
No.
It was something we designed from the outset because we wanted to make sure that investors felt comfortable, and we wanted to make sure that we both, investors and the Quanta team alike, had the opportunity to really get to know each other, because at the end of the day, people buy people. We're every bit as much a people business as we are a property business. We can't do one without the other. And our investors having so much direct, genuine access to the team, I think you're right, it does set us apart.
And not just to take our word for it, of course, just sitting here, but at our mid-year investor functions, of course, we did a round of video testimonials as well. And I think all of us were probably blown away with some of the responses that we had on camera. And they're available to see on our website, our YouTube channel, plugging us a bit there. But they're really good. They're honest from our investor community. That they give a really good insight as to what we try and achieve as a team.
Agreed. Well, thanks, team. That was a good chat. Hopefully our investors find that informative, recapping on last year and having a look at what is coming this year. Thanks to Andre, Caitlin, Dave, Aaron and Stacey. And have a great
Thanks
2020.
to you, Tim.
Oh, thanks, Stacey.
Thanks, Tim.
Hope everyone has a great 2026. Happy investing.